Next up, we have Coda Minerals. Coda Minerals, trading under the ASX code COD with a market capitalization of around 19 million, is the 100% owner of the Elizabeth Creek copper project in South Australia. Coda has over 1 million tonnes of contained copper and cobalt at Elizabeth Creek, where it is simultaneously advancing economic and technical studies as well as an ambitious copper exploration portfolio. Presented today is Coda Minerals CEO Chris Stevens. Chris, welcome, and over to you.
Thank you very much, Paul, and thank you everyone for joining the Share Cafe presentation. Over the next 10 minutes or so, I'm very aware that I'm standing between you and the end of the webinar, so I'll be reasonably brief and hopefully point you towards our website and our extensive social media and updates as well on our website over the course of the presentation. So next slide, please. If you could go through the next two. Great. We are located about 6 hours north of Adelaide, 6 hours drive north of Adelaide. We're right next door to BHP's formerly Oz Minerals Carrapateena project, just down the road from Oak Dam West and not too far from Olympic Dam. I mean, in an industry where the term tier one location gets thrown around like confetti, this is one of those genuine tier one locations. It's not all neurology. As Paul said, we have over 1 million tonnes of contained copper and cobalt. That's roughly 800,000 tonnes of copper, the rest cobalt, in JORC resources, and a published study as well. Next slide, please. In terms of experience, this is a very experienced board. I've worked with this board now for approximately 7 years. Robin and Paul at last count had developed 17 gold and base metals projects, either as executives, as steering committee oversight, or as board members. Huge amount of experience. Keith Jones, former chair of Deloitte as well, one of Australia's most experienced corporate advisors. So whether we develop or commercialize another way, rest assured we have a significant amount of experience on the board. The main team of 5 people, 4 of us have degrees in addition to our first degrees in mineral economics. And so again, this is a very financially driven, technically driven organization where everything is very carefully risk assessed, and we're trying to drive outcomes for shareholder value. One of those things you can see reflected is in the tight capital structure. For a company that has been listed 4 years, we have just 175 million shares on issue. The chair is our 3rd largest shareholder and very involved. He's a great person to work with. 3.4 million cash equivalents at the last quarter. It'll be similar this quarter because we raised or finalized another $1 million from a raise during the quarter. Next slide, please. Now, this slide came about. I'm a big fan of listening to audiobooks and podcasts. In fact, Coda Minerals has our own podcast called the Codcast. Why did we do this? I have no desire to be a podcaster, really, but every 2 weeks we put out a new episode. There are 9 available. And we came to the view that, you know, when you make investments, it's important to understand who's behind the company. So rather than just listen to me on an occasional webinar, excuse me, you can go behind the scenes. You can see our analyst, you can see our exploration manager, and get to know the company, get to know who we are as a team, how we make decisions and how we face challenges, because make no mistake, this is a tough industry and there are many challenges. Now, this slide came about because of the second best mining and exploration podcast, the Money of Mine podcast, slightly more popular than ours, but a very intelligent guy who's on there occasionally, Ahmed Salim, was talking about what makes a great exploration company. And I sort of wrote down what he'd said and how we measure up. And I thought we measure up pretty well. In terms of assets, obviously you're looking for a quality asset. Over 1 million tonnes of contained copper equivalent, mostly JORC indicated. So the higher confidence, you can publish scoping studies, you can publish net present values, and we have done that. It's a low-risk jurisdiction. South Australia, unashamedly tier one, brilliant place to be working. Simplified approvals, not only because it's South Australia, but because of where we are in South Australia as well. Over the last year, 2 years, we've increased the number of resources from just 250,000 tonnes contained to over 1 million tonnes contained. That's, to put it in context, taking it from, you've found something, to, okay, this will be a mine one day. We've delivered significant technical achievements as well, processing pathways, viable mining plans for the open pit and underground resources. And since our first study, which we probably put out too early, but such are the powers or pressures of news flow, we have increased the value of this study by 45%. Make no mistake, there's plenty of gas left in the tank. It's also a very strategic asset that cobalt gives us access to incentives and critical minerals funding that most copper gold projects wouldn't have access to. Next slide, please. This is a pretty complex and busy slide, so apologies. The best thing to do is go to our website, look for the Verify presentation, and to do a lovely 3D fly-through of all our assets. Effectively, there are 3 open pits, MG14, Windabout, and Cattle Grid South. These give early revenue. Phenomenal grades for open pits. Look at that, 1.67% copper equivalent in the resource. The production targets, which is the earlier stage version of a reserve, over 1% for all, including the open pits. Cattle Grid South, a little bit lower there. But that's a breccia hosted, so it has phenomenal metallurgical characteristics. The underground, 1.9% in the resource, about 1.8% in the production target. So over 30 million tons getting mined at 1.8% copper equivalent in the mine plan. Next slide, please. We put out a scoping study in January 2023. We've updated that twice, and we are moving towards an enhanced update with a lot of the recent work included as well. So we are continually improving this project through optimization, transformation, and the next stage after that will be more exploration. Currently sitting at 826 million pre-tax. That's on an 8% discount rate. I know 8% to us is quite standard, but other companies are going as low as 5% at the moment. But these are very solid base economics. 340,000 tons of copper being produced over life of mine, nearly 20,000 tons of cobalt sulfate at a battery grade as well. So very strong economics. I will explain in a second why I expect these to increase as well. Next slide. Now, this is an interesting one. Lurking beneath the underground deposit is an IOCG intercept we hit 3 years ago. Sent our share price absolutely skyrocketing. The share price graph does look like a mountain with that huge uplift in 2021. Excuse me. However, we hit a whole bunch of really interesting stuff in the basement. IOCGs are challenging. They require time and effort and money. We are currently talking to a number of groups. We are working towards getting a partner to drill this out. The one thing we won't be doing is risking the funds that we're using to enhance the base projects to go exploring in the deeps. But this is a phenomenal target. Bookended at both ends over a 2.5 kilometer corridor by major ore grade intercepts, 23,000 meters of drilling. If you're a fan of the history of some of these IOCGs, they do take a bit of time and they do take a bit of drilling. This is a side project. It's amazing blue sky upside. It does, to a large extent, explain why we're currently trading at a 97% discount to net asset value backing. So again, just for the avoidance of doubt, the base asset is the copper cobalt. This is a real project. It has a net present value, which has been increased by 45%. It has significant ongoing work. Underneath it is something that is very interesting, and I'd love to find out what's going on down there. I believe this will get drilled at the right time in the right way. Next slide, please. Onto the significant catalysts. So moving away from the IOCG, back to our base copper cobalt project, the 3 open pits and the 1 underground. About 3 months ago, we were working in the lab, looking at seeing if we could improve those average recoveries. They're not terrible, but they're not great. 77% recoveries in the main project. These are pretty well comparable, but they could certainly room to improve. Now, the cool thing about improving recoveries is a 10% improvement in recoveries is like finding about 20% more mineralization plus. And we talk about this extensively on the CODcast series, episode 8. So go and have a watch of that. It's about 10 minutes long, and I think it's worth a listen. But the work that we're looking to improve, it didn't kind of work out. And the metallurgist looked at this and said, I've got an idea. Threw a couple of these new collectors to get more of the part of the copper and oxides at it, and boom, suddenly we got a 12% increase in the rougher stage. That's enormous. So we're about a half a way into this next stage of test work. We announced the first results in July. Watch this space because this is very exciting. This is like drilling without having to drill. Now, the great thing about drilling without having to drill is when you drill more, it also makes that more valuable. We do have a significant exploration portfolio. We have been working through the targeting and we expect to be drilling that soon. Right now, we're focused on the metallurgy, but make no mistake, this is exciting. Next step, also, we just announced a Calgary South, another deposit. We're bringing this all together into an enhanced study, which we expect to have out in the second part of this year, probably early into Q4 is the current target. We're also rapidly advancing approvals. Now, someone else mentioned Rexol do the same thing. One of the reasons that got sold for such a premium is just the value of having an advanced project. It's not super sexy from a news flow point of view, but make no mistake, it's valid. So we have some great catalysts. We have some great things we're advancing, and we have the excitement of improved economics subject to the work we're currently doing relatively soon. Next slide, please. Just to summarize, this is the final slide. I've covered all of this in the presentation. Right now, we're in the maximize phase. This is focusing on transformational work that's really pushing the bounds of what this project is and what it can be. Bear in mind, we've already got JORC indicated resources, so significantly advanced geological understanding with mine planning and the metallurgical work as well. The next stage will be to expand to look for additional resources. We don't necessarily need them, but they're definitely nice to have. And then the exploration in the IOCG could be transformational. We need to find the right partner, but it's a very exciting blue sky opportunity. With that, I'll take questions. Thank you.
Chris, thank you very much. And I love the idea of the podcast. I think that's a wonderful thing that you're doing. And I think you're absolutely right. You know, investors love to hear different people in the company speaking about the project. So I think that's a very unique way to communicate your messages. So
you know, Paul, we felt really silly doing this, really silly, and it's getting 200-300 views per episode. We're getting wonderful feedback. I've taught myself to video edit on Saturdays. Yeah, it's actually a lot of fun.
Good on you. So a couple of questions here. This one, what is the status of the scope and study at Elizabeth Creek, and will the NPV and IRR be upgraded again?
Look, obviously, I've got to stay within ASX bounds at this point. We released a scoping study. Did we do it too early? Probably, but there's a lot of pressure on news flow. I don't think any company has ever had a good answer to that question. We are updating. We are doing, I don't like the word optimize because it's a lot more than that. This metallurgical test work has the potential to deliver significant uplifts. And the 12% in that rougher stage is indicative that we're onto something really good. We have to replicate that right across the deposits. And there's a bit more work to do, but the short answer is, based on that work and based on the results we've had today, I think there is very reasonable expectation that we have some upgrades to be able to do. That's probably all I should say. The addition of Calgary South as well, there's another 35,000 tons of copper. That should also be an enhancement to the study.
And how does the Elizabeth Creek compare to nearby discoveries and developments from your neighbours?
Yeah, look, I mean, ASX frowns upon peer comps, although I'm a big fan. I've got lots of them internally. You know, you know, anyone with a calculator can sort of do a price over net asset value backing and see that Coda is trading very low in comparison to its peers. We've just seen Rex Minerals. Now, if you look at the economics of the projects, the net present value on the studies, they're pretty materially similar. And Rex, for some reason, used a 4.8% discount rate. So that's how much you discount the future value of money compared to our 8%. So again, I think we compare very well with our sedimentary copper cobalt project. The IOCG is fascinating. I mean, most of the projects close to us are an IOCG project. The grades we've hit are multiples of the resource grades of these proximal projects, but we haven't found the scale and the brecciation, so the space, yet. But again, you know, it took Carapatina 50 plus holes to really get a handle on what was in that deposit. And we've drilled 8 parent holes to date. So again, I think there's a lot to be very excited about in that, but I always focus on the sedimentary. The IOCG is the, you know, the cherry on the cake.
And you touched on this earlier, and maybe you can elaborate a bit. The cobalt part of the project, this provides funding avenues. Maybe explain in a bit more detail how that is the case.
Yeah, I really like this cobalt. So one thing I didn't mention is that most cobalt in Australia is cobaltiferous pyrite. It's locked up with iron sulfides. That makes it very hard to liberate, very hard indeed. Our cobalt is analogous to DRC, Zambian, and Central European cobalt. It's called carolite. This liberates beautifully. No roasting, no complex pyrometallurgy. Even in the flotation stage, we're getting over 90% recovery of this cobalt. So that puts us in a very different position. I do think we get discounted a bit because of the negativity towards other Australian cobalt, which is challenging. So it opens up a few things. The government's Critical Minerals Incentive Grant is a direct rebate in the early stages of the project before you're paying tax in cash. Now, they haven't released the policy yet. We've modeled this up internally, what we think it is. We can't release that until the policy details are there, but that will be subject to the policy being released and more details and material upgrade to post-tax net present value. We also are aware of many grants and funding opportunities and companies looking for access to that cobalt. It's a significant amount of cobalt. It's nickel independent. It's planned to be battery grade, and it's in the world's best jurisdiction for ESG friendly characteristics. So the world's most renewable grid. So to my mind, I absolutely love the cobalt. I think it's a real strength of the project. For some reason, I think we maybe get discounted because of some of our peers.
And the leading question here, along your borders is BHP. Have there been any discussions with them?
Look, I wouldn't be doing my job properly if I wasn't talking to all of my peers. I also worked at PricewaterhouseCoopers many years ago and was one of the sort of account managers with BHP, so I have good contacts. We know them. We know what their priorities are. I won't say any more than that, but certainly it's interesting to note that some of our deposit carries on into that ground. That's all I'll say. But yeah, I wouldn't be doing my job properly if I wasn't speaking to all of our peers, all of potential people all around Australia and further afield looking for copper.
That's a great answer, Chris. And a couple of questions coming here. Where can I find the Codcast, please?
So if you go to YouTube and type in Coda Minerals, it will come straight up. If you go to Apple Podcasts or Spotify, if you Google if Codcast, a lot of Call of Duty stuff comes up, so it's not always easy. Otherwise, go to codaminerals.com and click on the updates banner. That'll take you through to our investor hub. One of the things we do is it's not just Codcast for interest. Every time we release a technical announcement, we know how challenging these things can be to read. There's a lot of technical information. So we sit down and we talk about it. Last time we were talking about flotation, I edited in what flotation cells look like. And, so again, it's a really nice source of trying to understand a bit more about what we do and what we're talking about as well. But yeah, codaminerals.com/updates.
And Chris, we'll add a link to the Coda Minerals Share Cafe homepage to those podcasts as well for you.
That's wonderful. Thanks, Paul.
Chris, been an absolute pleasure. I'd love to get you back on later in the year to get an update, but you have a fantastic weekend.
Thanks, you too. Thanks, everyone.